Okay. Now this is where we start doing entries and we did reversal. Okay. Okay. But first step is what? First step is establishing, forming, defining. Defining what? Company code, plant, purchasing organization, sales org, controlling area, cost centers, profit centers.
What are these company code
I'll
plan?
tell you, I'll tell you.
Are these entries?
I will tell you. Just a minute. Profit centers. Okay. Now, this is something you will find in nearly every ERP. In SAP, you need something a little more. And what is that? You will need
ERP means
ERP is enterprise resource planning, ERP.
okay.
Okay. Now, what is ERP? Like SAP, Oracle, Odoo, NetSuite, PeopleSoft,
Okay.
Tally, Fact. Okay. Now these are ERPs. Okay. Zero. It's a mini ERP, mini cloud ERP. So what is ERP? Enterprise. What is enterprise? Your company. Company.
Okay.
Resource. Now what is resource? Resource is the department. What department? Sales, finance, production, HCM, inventory,
Okay.
logistics. These are department. And planning, yes, ERP plans all the resources for the company, for the enterprise. Okay. So what it plans quantities and financials, forecasts, um, budgets, um, production, inventory, expenses, and so on. So this is something you will find nearly in every ERP in some sort or the other. But the baseline is to have a proper structure for all this. Okay. And it also plans revenues. Okay. So,
Okay.
so company code is
So these are the basic elements of any
yes,
company.
yes. Company code is nothing but company which has its own financial statements. Plant is where you uh, build your stock, store your inventory, manufacture your goods. And goods are uh, raw material, semi-finished goods, finished goods. Purchase org, this is a purchase organ is fundamental and pivotal for any company, and it is supervising inventory like raw material, consumables, or anything, um, assets. So everything is managed through a purchase organization. Sales org, this takes care of selling finished goods, assets, and what else? Scrap, machinery, and stuff like that. Controlling area is basically used for evaluating uh, profitability, costing, and uh, currency, or group currency based reporting, okay, and profit center accounting. So in controlling, we have cost centers and we have profit centers, and cost centers report to profit centers. Okay. So after configuring this, we have ledger settings mainly for accounting standards plus currency reporting in various currencies like company code currency, controlling area currency, profit center currency, group currency. And we have valuations which are legal, group, and profit center. Okay. Then we have document splitting to split inventory, taxes as per profit center or business area or segment. This is the basis. And inventory, taxes, and vendor. Okay, we split that. We split one document into multiple line items for profit center or business area or segment. Okay. Then we have material ledger. Material ledger is for evaluating material at using currency types. And that currency types can be company code currency, group currency, profit center currency, and so on. Okay. And this is when this is done, then we create chart of accounts. Okay. Chart of accounts is nothing but group of accounts or collection of accounts. Okay. When chart of accounts are done, fiscal year variant is important, and this is July to June, April to March, January to December, and so on. Okay. And this is very important. Okay. And what else? What else do we have other than this? And then, of course, when we start doing GL entries. That's it. Okay. So this is what we have done so far in FI right now. Okay. So speaking of general ledger, document entry, we entered the document entries with a debit and credit using posting keys. Okay. So now we've done reversal as well. Now we can go for vendor master data. Okay. Or we can Puna expense. Puna expense, create chart of accounts. Puna expense to cash. Line items. Okay. 40 Puna 30201. Amount 1200. 50 Puna 10101. 1200. Currency for amounts AED, continue, save, and we have Puna expense as account assignment model. Okay. We go to general posting F-02 document, edit, go to account assignment model. Okay. Account assignment model, Puna expense or any other model that you have, continue, and you have all these entries, save, enter. Document was posted just in 3 clicks. Okay. If you want to check more document display, this is 104, expense 1200, credit 1200, profit center is already taken. Okay. So this is how you create a document assignment model. Next that we can do is recurring document. This is very important. First run is on 01/11/2023. Last run will be on 31/10/2024. Interval in months is 1. Run date will be 3 of every month. And document type will be SA, which is accounting document. The reference is recurring, recur, insurance. Recurring insurance. First line item is 40 30201. We'll assume this is um, insurance account. Okay. So let's say 800 is the monthly installment for insurance, and 800 insurance recur 30201. No. Okay. 50 10101 star enter and post. It will not post, it will just save it. 2100 was stored in company pool. So next step is FBD4. Recurring document changes. No, we want to run it. Okay, document entry, periodic processing. periodic processing, recurring entries, execute F.14, company code Pune, 2023, posting date is 03/11/2023. Settlement period is 01/03/11/2023 and 30/11/2023. Batch input name is 03 November Insurance. Okay.
Okay, I have a question. What
Ex-
are these
This
product
is
selections, output control, general selections?
just a second. I want to run this. It is saying it is not running. It is not. Okay, let me just check. You start a report. Could not be created. Okay, selection criteria has to be changed. Just a second. Entry date will be 03/11/2023 because we gave 3 as the run date. So we are running this on a run date. Posting date will be 3, entry date will be 3, settlement period will be 3/11/2023. User. Okay, now let's see. Execute was not created. Okay, let's see this in the next one. I'll stop